or professionalism. Can we have the slide on, please? When we talk about professionalism, most people think being professional is a function of the finance, maybe, looking all kit up, all these fancy title that we all have, doctor, Ololade, chief, this and that, or wearing a suit and the cute tie that we have. Most times, we even interpret being professional to be having this nice corner office. The glass office where you oversee the ocean and you're on top of every other building. But in the real sense, this has nothing to do with being professional. Professionalism is actually beyond what we see. It is having our signature on every job that we do, as a realtor or otherwise. That is what being professional means. In fact, being professional means your job is not to be the best in what you do. It's to be the yardstick for measuring other people being the best. That is what being professional means. And this is what we'll be having conversation around today. Next, please. Professionalism, we've actually looked at it, and when I saw the topic, I was like, where did this person get these cardinal pillars from? Because for you to be a professional, you have to really follow these 4 pillars. The first one is ethics. You have to be ethical. If I may ask, I don't know if there's anybody who can tell me what is good and what is bad. I just need probably 3 people. If there's anybody here that can just tell me, when you say something is good, what does it mean? And when you say something is bad, just personally from our own experience as an individual. Is there anybody who would like to talk about it, please? Just give me the definition, simple definition of what is good and what is bad. Is there anybody who want to try? Please, where's the other mic? I have one person here and another person there and the third person. Please. This is the first person, yeah? Good and bad. Just simple description or definition as the case may be. Thank you.
Right. Yeah, from my perspective, when we say what is good, I feel it is something that is generally acceptable by people. I would say bad things that is generally condemned by people.
Thank you very much. Things that is generally acceptable by people, and things, excuse me please, and bad is something that is, excuse me, oh, sorry. And bad is something that is, generally not acceptable by people. Common sense.
Good afternoon,
that is
everyone.
Simple. Good afternoon.
So what is morally good for some set of people might not be the same for some people. Cultural differences, so it's relative.
Okay, thank you very much. She said good or bad is culturally or religiously relative. So what is good today, you'll be shocked, it will be bad tomorrow. What is good in Nigeria will be bad in the United States. That makes a lot of sense. Thank you very much. Next, please. Please, the lady in blue. Thank you.
I'll say it's relative. Actually, he kind of touched the point I was about to make. Whatever is perceived is about perception. It's perceived as being good. And then at times, it's about a set of rules. When a child is growing up and you say, don't touch this, don't do this, it registers, it sinks in that this is not good, this is not acceptable. And maybe code of conducts that have been passed down the line, that becomes an acceptable norm. Thank you.
Thank you very much. I know I have one more person that wants to talk, but actually it was that Papa that actually raised his hand first. But after him, then you speak then, so that I will not waste most of the time. We have less than 30 minutes to wrap up.
I think I want to simply say what is good is what conceptually is not inflicting injury on anybody wherever you find yourself. And what is bad is what is targeting injury on a person in any location you find yourself.
That's fairly okay. What is good is what harms someone, and what is bad. What is good is what does not harm anybody, and what is bad is what harms someone.
Okay, my name is Daniel. To me, what is good is an asset, and what is bad is actually a liability.
That's just use of English. That's very okay. That means what is good is what had values, and what is bad is what takes away value. We've all spoken, well. Please, a round of applause for everyone who has spoken here today. Thank you very much. That is a very smart one. But when we are talking about what is good, because what is good cannot be generalized. Whatever is good to you is actually bad to someone else. 100%. So in the real sense, generally speaking, what is good is actually what favors majority of the people. That is what we consider good. And what is bad is actually what does not favor majority of the people. It is not about it being good, because let's assume someone comes to steal your bag. To that person, that's good actually. But to you, it is bad. But if everybody starts stealing everybody's bag, it will be bad to majority of the people. Let's talk about construction. They want to construct the road. Hundreds of millions of people will ply that road. But we have about 100 houses along that road. They are going to demolish those houses because it is only going to affect 100 people. Why the road will be useful to hundreds of millions of people in the course of using it. That makes it good. So therefore, good is what favors majority of the people. It will always be bad in someone's record. That is certain. Why what is bad is what does not favor majority of the people. And that is the basis of most legal doctrines at the end of the day. So ethics here. Someone mentioned that ethics, like good, is what is in the code of best practices or business practices. Actually, or code of conduct, as it is popularly said. For the purpose of this discussion, we will not be seeing ethics as that. In fact, ethics is not what is contained in any document. It is what we do when the law is silent. Ethics is what we do when the law is silent. It is not what we do according to the law. We should get that straight. Ethics is the alignment of our actions with our value when no one is watching. That is what ethics means. It is the alignment of our own value. Alignment of our action with our own value when no one is watching. That is ethics. As an individual, as a business, as a consultant, as a realtor, we ought to have values. Because value is what drives you when no one is watching. I believe we all have value that drives us. We are all realtors here. The end game is to sell real estate. But what drives you? Are you being driven by the commission? In the course of the discussion here, somebody said what drives her is poverty. Like most of us, what drives us to whatever it is we are doing today is the fear of poverty. You want to hustle. That is what drives us. But can that sustain us? No. We are all hustlers. Most of us here, we are accidental business owners. You have been trying this, you have sold this, you've tried this, then you find out that real estate is doing fine, you jump on it. That we are being accidental. But for us to scale as professionals, we need to move beyond the hustle spirit. Just as an hustler, we need to move beyond that. Then we have to be deliberate business owners. And how do you become deliberate business owners? Is by following these 4 pillars of business, or we can call it career longevity. Ethics, documentation, taxes. You know, there are 2 things that are very inevitable in life. Once you are born, you have only 2 things that you must do in life. You are certain going to die, and between you and her, you are going to pay tax. Whether you like it or not. Those are the 2 things that are certain in life. You will die. Whether direct or indirect, in as much as you are living, you will pay tax. Please, what other thing is very important that you must do before you die in life? Once you are alive. Tell me something else. Do you have any other thing? You must eat. And that survival is not what you do. In fact, they feed you sometimes. You take risk. Yeah, we do take risk. But some people don't take risk, actually. They are in the village. They are comfortable. They just eat, drink, go to stream, come back, and eventually. Absolutely. Not taking risk is a risk in itself. So we have ethics, like I mentioned. Can we go to the next slide, please? We've spoken about professionalism. Next, please. Yes, ethics, like I mentioned, ethics is the why you do what you do. We are all in the same profession. But how do we do what? What is the reason for doing what we are currently doing? Are you here to fill in the gap? Are you here to survive? You are just hustling. Are you here to build legacy? These are different reasons for being here today. Some people are here just to live through the week, live through the month. Another year is here. Let me live through this year. Or are you here to build a sustainable legacy into a foreseeable future? This is where the ethics come in. You have to have what inspires you, what drives you on a daily basis, what you do when no one is watching you. It is very, very important. And that is the why of our decisions. Then we go to documentations. Before I go to document, can I go to the next slide so I run through what I have on ethics? Like I have said, ethics is the alignment of your actions with your values when no one is watching, and the alignment of your career with the truth when people are watching. These are two different things. When no one is watching, you have your value. But when people are watching, are you still going to stand by the truth? That is another question. Because, you can be, chief coach is here, and chief coach says, I want you to sell this land. But your ethics does not align with the rationale behind that land. Maybe there's a document that is still being processed. I wouldn't know. Maybe there's whatever real estate thing that needs to be done that is not yet done on that land. I wouldn't know. Will you be confident enough to stand by the truth and look at chief coach straight in his eyes and tell him, oh, guy, I understand this, but I'm not going to sell this land? That is when everyone is watching. Chief coach is watching you, and he wants you to sell. Would you still stand by the truth? Or are you just going to fall in line like every other person, join the bandwagon, and just do the sales? These are the ethical standards. Professional ethics isn't just about following the law. It is about doing the right thing when the law is silent. See, law cannot cover every aspect of life. That is why every now and then you review the law, there's amendment, because before now there's no this digital, online, social media influencer and the likes. So when it comes, the law needs to be amended to align with that. So, but the question is, when the law is silent, what do you do? It has to follow your ethical belief. Now, we may say that we don't know what is ethical and what is not ethical. Let us test ethics. Next, please. The 3 questions, litmus test you must ask yourself to determine whether this is ethical or not. The first question you ask yourself, one, the transparency test. You run a transparency test. What do we mean by transparency test? If this is put out there on the face of national dailies, on the internet, if someone is there to display what you are about to do on this screen where you have your colleagues seated, will you be proud of it? If you will be proud of it, fine, that is ethical. If you will not be proud of it, it is not ethical. It is that simple. Another test you need to run is what we call the legacy test. What do we mean by that? In the next 5-10 years, would you like to be remembered for what you are about to do? It is that simple. If you are willing to be remembered for that you are about to do, this land you are about to sell to this man, in the next 10 years, if you meet that man, will you like him to remind you that you sold this land to me, this house to me, this property to me? Would you like that? If that is fine by you, good. You are good to go. But if the answer is no, then it is not ethical. And the last one is the universality test. Universality test is simple. If everyone in your industry, at your workplace, your friends, your colleagues are doing what you want to do now, will the business survive? It is that simple. Will the industry collapse? If everybody is selling bad houses, untitled lands, all the properties that government are demolishing and all that, if everybody is selling that, will you have job in the next couple of years? It's that simple. If you are able to answer all these questions and you have yes, 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 then what you're doing is ethical. But if any of this is a no, then it is unethical. So we cannot say we don't know what is right or what is wrong as far as this is concerned. Next, please. Your value proposition. We know that the rarest currency as we speak is having integrity. And it is much more better for you to pitch your tent where you have less crowd. So when you have high ethical standard, a whole lot of people don't have it. A whole lot of people don't have it. That's the fact. So when you have what most people don't have, that becomes rare. In the world of today, we have a whole lot of mediocres pushing themselves in the faces of people in the name of social media and the likes, just wanting to be there. They don't know what they're doing. They lack integrity. They lack competence. But for you, you pitch your tents where you are special. And how do you become special? It's by building reputation. Sound reputation. And having a skill set that makes you rare and unique in your field as a professional. Because being a realtor is a professional. It's just like being an accountant, just like being a doctor, just like being an engineer. That is exactly what being a realtor is. It's not what you just start by the roadside, you just jump like BRG calling people and you think you want to start selling. It doesn't work like that. You need to seek knowledge, have the skills that stand you out, and increase that by being professionally ethical. Legacy insurance. When you build your career on trust, on ethical standards, it becomes a legacy. And such legacy can stand the test of time. Because when 10 years to come, 15 years to come, 20 years to come, whatever you have done today will still be valid because you follow the ethical standard. But whatever you are doing now that doesn't follow through or does not pass the litmus test will one day come back to haunt you. Next, please. So that'll be that on ethical. I don't want us to overflow that. The next pillar is documentation. You cannot over-document. See, if you are building to last, I don't know, maybe this is your side hustle and you have another career that you are pursuing, where it's fine for you to just do, abracadabra in the next 2-3 years, you are out of the game. you continue another profession. But if you are here to last, you need proper documentation. It is said in the professional world that if it is not documented, if it is not written, it did not happen. It is that simple. See, whatever is it that you are doing and it is not properly documented, it never happened. In fact, documentation serves as the black box in the professional world. You know, in an aeroplane, when the plane crashes, everybody rushes to the black box because that is where you get information about what happened in the airplane. So the same thing happens with documentation. When there's any issue, where everybody rushes to is your document. You cannot over-document. You cannot over-document. Always keep your records straight. As a career person, your wins, document them. If you don't, it will look like a miraculous win because you do not even know what you did to get to where you are. So how can you even train someone? You cannot be a mentor because you just thought you were waking up, you did this and that's the end. Somebody was here today and said, I bought so thing of 6,000 and that yielded this result. Some people did not even know what they did to get the result. It might not be, it's because that is practical, like he gave something. You will be shocked that your choice of words can be the reason you win a contract. It might even be your outfit, the way you look the day you met the person. It might be your posture. But if you don't keep track of how you relate, of how you do things, you will not know how to repeat them. And that is why documentation is key. That is about us as a professional, as a career person. As a business owner, you need to document. Because documentation is the only way you can substantiate your evidence in the court of law. If you don't have proper documentation, there's no way even a taxman, I've been hearing a lot of stories, people talking about, I would describe my transaction as gift, like someone said, now I would describe it as amala. You want to buy amala, 9 million naira. Yeah, you want to feed the living and the dead. Family upkeep. 20, good, thank you very much. What are you keeping? You understand? So it is not about your description. It is about the document you can use to substantiate those descriptions. So a taxman don't care about your description. In fact, your description is for you to remember in 2 years' time what you use that money for. So that description is not for a taxman. A taxman believes on the supporting document. You bought amala 100 million. It's fine. You can buy amala 100 million. It's okay. Where is the receipt for the amala? So that we can go and meet the amala seller and collect our tax. It's that simple. So buy amala 100 million. It's okay. It's fine. So we can buy it. Keep your documents. You cannot overemphasize the essence or the importance of proper documentation. When you keep your document right, it avoids chaos. It gives clarity. So even if someone is, in fact, there's a popular saying that integrity or ethics is what you do when no one is watching, right? But documentation is what you give, even when everybody is watching. Because your integrity can be tested. My people will say, when you say God should see you, let human beings see you. So the ethics, your value, is the God seeing you. But if you want human being to see you, document. Without evidence, you go explain. Tire. You need that evidence. It is extremely important. Because what will the auditor trace? What will the taxman? It gives room for traceability. Okay, what happened last year? How do we relate what happened last year to what happened this year? How can we use that to kind of predict what will happen next year? It is a function of proper documentation. I don't want to overflog this, but we need to keep documents. Next, please. Traceability verification. When you want to verify any discussion, conversation, and all, you need proof. And the proof is through documentation. As a business owner, you need SOP, standard of operation, where you put what your staff should do. So that when Ololade, who happen to be your staff today, leaves, and you decide to bring in Olabanji, he can know what Ololade was doing. It is that simple. You are today describing amala and rice and beans. It's fine. But without proper documentation, if the guy there today decide to leave, how would you explain, how will the next guy explain to the auditor when there are no evidence? And your evidence is just your document. Next, please. Are we here? Documentation, evidentiary weight. Yes, evidentiary weight, it shows your evidence. You don't need to explain too much. If I happen to be an accountant and I have a director, and the director is saying, Ololade, you have stolen my money, it's fine. You can say that. But when I bring my proof, you cannot argue with it. It is what it is. You go to your bank statement, you check your financial statement, I show you all supporting documents. You have investors. As a business owner, you have investors. They are not there. They are not in the business with you. They don't run the business with you. What they rely on are your documentations. So you need to properly document as evidentiary weight. Accountability and clarity. It gives accountability. You don't need to overstress that. We need no further description or explanation on that. Knowledge transfer, like I mentioned, Ololade is here today, Omo Bolaji is here tomorrow, Olabanji is here next tomorrow. The documents remain sacrosanct. They are there, they are not living. They give, historical report on what each of them had done while in the office. It's that simple. Next, please. Integrity is doing the right thing even when no one is watching. Documentation is making sure that when they do watch, the truth is indisputable. And that is what documentation does. It's that simple. Because it's only God that sees your value in your heart. But human beings don't care about your value. We care about the evidence. And that is why you need to keep your records. Next, please. Now we go straight to tax compliance. And this is where I know everyone is, So, first, before I move further, I would like us to have this ideology, top of our mind, that tax should not be seen as cost. Tax should be seen as the license of operation. When you see tax as cost, you want to cut it. You want to reduce it. You don't want to pay safe. You want to avoid it. But when you know that tax is important, you cannot avoid paying taxes. Then what you can now think is to strategically plan on how to manage your tax. There's no problem about managing tax. It's fine. It's okay. But trying to avoid tax is a criminal offense. So top of our head, we should know this is not a cost. It is a license that you pay to government to do business. Because if you really want to do business in Nigeria and you don't have your tax clearance, nobody will do business with you. Nobody. In fact, as of today, if you do business with a company that is not registered with tax, you have a fine of ₦1 million. No, sorry, million K. 5 million naira. So that's the fact. If BRG now decide to onboard a developer that does not register, did not register with the tax authority, did not present tax clearance, and the tax authority comes to you, BRG will pay 5 million naira as fine for doing business with that person. And when they get to the person too, you do not have tax clearance, you do not register, you pay 5 million naira. Now imagine, even if you comply, how much will you pay? If you comply and you do the right thing, how much will you pay? But because you don't comply, you're supposed to pay 5 million naira. And that is the position of the law. As at 26th of June 2025, the President of the Federal Republic of Nigeria signed 4 bills into law. We have the Nigerian Tax Act 2025. We have the Nigerian Tax Administration Act 2025. We have the Joint Revenue Board Establishment Act 2025. And we have the Nigerian Revenue Service Establishment Act 2025. These 4 acts became effective in January 2026. The Nigerian Tax Act did not do a lot. This just helped to harmonize our taxes. We have a whole lot of nuisance taxes in Nigeria, about 60 of them, and they are in different acts. So different laws, you have the Company Income Tax Act, the Petroleum Profit Tax, the Personal Income Tax, Value Added, and the likes of them. So all these taxes were consolidated into one. That is what the Nigerian Tax Act did. And it helped to refine, put a face to the tax. So let me put it out there again that the Nigerian Tax Act did not come to increase our taxes. Actually, mostly, it actually reduced our tax liabilities. To be sincere with you, it did. But this is the problem. Now you don't have any hiding place. It's just like before now, you are supposed to pay 10 naira. And if you don't pay the 10 naira, nobody cares. Or even instead of paying 10 naira, you can pay 2 naira, you can pay 3 naira, you know. But you are supposed to pay 10. That was what happened before. Now, you are told to pay 7 naira. It has reduced, but you must pay 7 naira. You know, in the face of the law, that's an improvement. But in your face, because you were able to not pay 1, pay 2, it is still bad. So that's why most people are clamoring. But in the real sense, the people that sat down to design the new tax act actually put a lot of human face on it. Except that the rich people, like all of you seated here, you must pay tax. So it's only the poor people that are not here that will not really pay much. So let's move so that we'll not waste most of our time. I only have a few minutes more. Next, please. Next, mindset, crippling penalties. Okay, another thing that I should mention is that despite the fact that the law now reduces our tax liabilities, it increases the penalties. So the problem is that before now, if you don't pay and you are caught, you pay penalty of 10%. Then, like what I said earlier, if you are not doing the business, if you are doing business with a person that did not comply, there was no fine. But now, if you did not pay what you're supposed to pay, you are going to pay 40% penalty. Not only that, you pay interest at the ruling CBN rates. And there are a whole lot of penalties based on your offenses. We have some as 5 million, 2 million, 1 million. We have some that you have to pay 13,000 every day till you comply at compounding interest. So what it means is just comply. Don't be penny wise, pound foolish. Because the fact is that the money you are saving today, you will pay times 10 tomorrow. So why would you want to do that? But it is better and cheaper to comply and do the needful. Next, please. Next. Don't want to waste. These are stories. I've just mentioned them. Next, please. Okay, good. So now, just to portray what I say about reduction, we have the corporate tax and the personal tax. Corporate income tax and personal income. Before now, we are expected to pay 30%. That's as a company. But based on the new act, it has been reduced to 25%, which is a plus. Small company threshold. For small companies before now, if you are doing 25 million turnover and below, that's 25 million sales and below, you are exempted from taxes. But now that has been increased to 100 million. So if you have a business that is doing 100 million and below, you will not pay any tax. Here is the bad news for you and I. Do you want me to say the bad news or not? I should go on. You want to hear the bad news? Thank you. The bad news is that as a professional service provider, I am an accountant, I'm a tax consultant, I'm just like you. We are both professional colleagues. We cannot claim small company. So even if your commission is 2 million, you will pay tax. If your commission is 1 million, you will pay. So that is the law. That's not me. So anybody providing professional service cannot claim small company. You must pay your full tax. Sorry for the bad news. Development levy, we have a whole lot of small taxes, nuisance taxes that have been consolidated. As a company, you will now pay 4% levy in addition to the 25% CIT. Personal income tax, where most of us fall into. In fact, all of us, because whether you have a company or not, you will still pay your personal income tax. So personal income tax is the tax you pay on your income personally. So if you have a company, that is on company tax. So for your personal income tax, before now, we have a cap from 7% to 24%. Now it is from 15% to 25%. So now our tax is progressive. The more you make money, the more you pay. It is your choice. So what this tax has really done is that it's protecting the poor people, which form about 97% of Nigerians. And it is focusing on the 3% rich people in this hall. So the rich people in this hall, you are all going to pay 25%. But the good thing is that once you keep your records, do proper documentation, you will be rest assured that you will not overpay. And in the course of doing all this, you get a competent and a reliable consultant to help you navigate the excesses. What we used to do is that we hide instead of coming out to present ourselves, our records. The problem is that when you hide and you are caught, you will be slammed. When you hide and you are caught, you'll be slammed. But when you come out and you allow professionals to review your records, and they will help you to maximize all the allowances. Because when we're talking about company income tax, there are lots of allowable expenses and allowances for personal income taxes. But you don't know. That is where people like us comes in. So it's very important. It is very important that we engage the service of professionals to help us navigate all this so that we will not end up paying much more than what we should pay. Exemptions. We have a lot of allowable allowances for our personal income tax. For instance, if we are having pension, you are contributing to any pension, it is allowable. Your 20% of your rent, if you are doing rent, 20%, and that should be one of your marketing strategy too. 20% of rent is allowable to the cap of 500,000 naira. It is allowable. Then, I don't know if you're selling properties that are under mortgage. All the interest that anybody pays on mortgage is tax allowable. So if you are paying any interest at all, irrespective of how high it is cost savings. Can you do to reduce all? So if you are on NHIS, NHF, life assurance for yourself and your spouse, it is that tax allowance. So these are the things you can use to reduce your personal income tax liabilities. So you can be earning the same thing as Mr. B. Mr. A is earning 120 million. Mr. B is earning 120 million. Based on how they are able to maximize their allowances, Mr. A can pay more taxes than Mr. B, despite earning the same amount. And this is where you need professional input to help you reduce your tax exposure without contradicting the law of the land. Next, please. So we have the rate here. For everybody, the first 800,000 of your income. Note, taxes are paid on income profits or gains. So I've heard a lot of people saying that any money that enters your account, a whole lot of bullshit going around. But taxes are paid on income, gains, and profits. You said? Okay, so in Nigeria, the good thing about Nigeria again is that we practice what we call self-assessment. You are the one that will go to the government and present your income or your profits or your gains to them. They don't know, so you will be the one to go to them and say, okay, last year my commission was 100 million and I incurred so expenses in the course of earning that commission. So my bottom line, which is my profit, is now 10 million. So tax the 10 million. You are the one that will go to them. So when you present that, you said what? So when you present that and they tax you on that, after a year or 2 years, they can now visit you and say, okay, you told us that you made 10 million. Please show us evidence. And it's the same thing if you don't go to, no problem. But take note that the banks now have the mandate to report any transaction above 25 million to the bank. So if your transaction, your inflow is above 25 million in a year, know that your report is with NRS. So if you don't go to them, it's fine. Don't go, they will come to you or they will invite you. So, and you will pay more, obviously. You will pay more, obviously. So it is important that we do the right thing. So this is a table for the personal income tax. Let me say this again. For those of us that are not registered as a company, or we are registered as an enterprise, this is the same table that we will use. But if you are a company, what happened is after deducting your allowable expenses, which are wholly and exclusively incurred for the purpose of making the money for the business. You cannot travel to Abuja and you go there to relax and flex, and you are putting it under your company. It will not fly. Your vacation is not part of the company expenses, except you are traveling to meet clients. So you need to substantiate the conference that you are going to meet clients, or you want to sleep in your room and meet clients. So you just need to substantiate with evidence. That's why we said documentation. So you must just have, tax is about documentation. Once you have your evidence, it's indisputable. But if you don't have your evidence, then you have issues because they will disallow it and you pay tax on it. It is that simple. So if you are having an enterprise, a business name, or individual as a person, your income comes to this table. So what happened after taking out all your allowances that I've mentioned? The first 800,000, you don't pay any tax. So if your income is 800 or less in a whole year, you will not pay any tax. But 800K for a whole year, you will not pay tax. That's why I said this law is for the poor people. It's for the poor people. But once your money moves above 800, the first 800 to 3 million, you pay 15% out of it. The next, above 3 million to 9 million, you pay 18%. Above 12 million to 25 million, you pay 21%. Above 25 million to 50 million, you pay 23%. Then, if you are a big man and your money still remains after deducting all this sum up to 50 million, right? So, after 50 million, any money above that 50 million, you pay 25%. So, that's the personal income tax table. So let us just make an analogy. Let's assume, you will have time for your question. So let's assume that your total commission, one house please. Let's assume your total commission is 200 million. You are not paying tax on the whole 200 million. Probably you've done some digital adverts. You bought some things for your clients, in as much as you can substantiate with supporting documents. You cannot buy yam and rice for your own house, and you are putting it under the expenses of the company. It is not. So now you have incurred all these costs and you can substantiate with evidence. From the 200 million, let's assume all the costs you incur is like 50 million. You will take out that 50 million from it. Make sure you have evidence to buttress the 50 million. Now you are left with 150 million. I am saying, I'm having this conversation with people who still transact business in their personal name or as an enterprise. If you have registered a company, it's another cup of tea. So for an individual or an enterprise, after removing your 50 million, you are left with 150 million. Then you can take out, if you are doing pension, life insurance, 20% of your rent to the cap of 500, you remove all those allowances. Let's assume you are now left with 140 million. From that 140 million, the first 800, you will not pay tax. So you are left with 139 million 200. So you take from that 131 million, you take the next 2.2 million from it. You pay 15% on that 2.2. Your money is still remaining. You take 9 million from it, you pay 18% on 9 million. You take 13 million, you pay 21%. You take the next 25 million, you pay 23. At the end of this, you would have moved 50 million out of it, because 800 plus 2.2 plus 9 million plus 13 plus 25 is 50 million. Whatever is now left, you will be left about 99 million. That 99 million, you now slam 25% on it. So you just go and pay, that would be about 25 million. Oh my God. So you now, wait now, you will now add everything together. You will add this 15%, add it to this, add it to this, add it to the 25 million, and take it to the government. So that is what you are expected to do. I'm just a messenger. I'm telling you what the law says. So if you need further explanation, you can always talk to us. That is why we are here, to ensure you do the right thing, reduce your exposure without contravening the law of the land. According to the law, I just delivered the message. So that is that for personal individuals and enterprise. But if you are a company, one house, if you are a company, what will happen is that you make the same 200 million, right? You put all your expenses, your staff, your rent, whatever, that is wholly and exclusively for the purpose of earning that commission. Note, I keep saying allowable expenses, not all expenses. You cannot just load expenses. Expenses that are wholly and exclusively for the purpose of earning your commission, you put it on it. Your staff salaries, whatever is it, you deduct it, advertisement, whatever is it that you incur, that you can substantiate via your documentation. You take it out, whatever that is left, you get an accountant to audit, you get an auditor, they audit it, there's tax calculations that we do. But at the end of the day, what do you pay? From this year transaction, which will be 2027 year of assessment, you're expected to pay 25% and pay another 4% development levy. So this is what happens. This is what happens. This is what happens. So let me say this. Sorry. Let me say this. As a company, if your expenses is the same thing as the enterprise, please listen. If your expense is the same thing as the enterprise, that's 50 million. The other guy spent 50 million. So if it's still 50 million, but you pay yourself salary from the company, which is different from if it is an enterprise. You don't pay yourself salary. The whole money is your own. Or an individual, the 150 million is your own. So now, from the other guy, if you expend the same amount, which is 50 million, then you pay yourself, let's say, another 50 million, which is your own salary. That 50 million, you bring it to this table. You will not remove any expenses again because you've removed the expenses from the company. So you only take all the allowances, like I mentioned, and you put the balance here. So you pay 15, you pay 18%, 21, and you pay 23, as the case may be. Then, you know, the profit from the company would have been reduced to 100 million. Because, you know, it was 150, then now you pay yourself 50 that you brought here. You take it out, then you'll be left with 100. That 100 million, you just slam 29% on it and pay as company income tax. What is time up? We are just starting. I'm just a messenger of the law. I'm telling you exactly what the law says. No, that one is if you did. I've told you, we don't fall under 100 million. And the law is not first 100. Is when your money, when your turnover is 100 million, you don't pay. If your turnover is 150 million, you pay on everything. Nobody will take out any 100, oh. Please take note. If you do 100 or less as a regular company that is not professional service provider, you will not pay any tax. But if you do turnover of 110 million, you pay tax on the 110 million, oh. So it is not that, it's not like this one that they will say, take out 800 first, oh. Nobody is taking out 100 million from your money. You pay everything. No exemption now. You are not exempted. You've exceeded the threshold of 100 million. So that is what the law says. No, there will be time for questions so that I will not interrupt. Please, let's move. This is personal income tax and company income tax. I think, next, please. Is it risk? Okay, before we move to this, let me just have conversation about 3 or 4 other taxes, briefly. So we have withholding tax. So the good thing about withholding tax is that withholding tax is not tax on its own. It's income tax advance. So this is how it works. All the income tax I've calculated for you now, be it as an individual or as a company, when anybody withhold your tax, that money is an advance for this income tax. So what it means is that if you are doing business with Boat Finance, and Boat Finance has actually withheld, let's say, 2 million from your contract, from your transaction as withholding tax, I would have remitted it to your income, your payer ID as an individual or your tax identification number as a company. At the end of the year, when you put your tax on that table, or as a company, you charge 25% on it. Whatever is it that you ought to pay, let's assume you're now supposed to pay 2.5 million. And everybody that has deducted your withholding tax now sum up to, let's say, 2 million, right? What you just need to do at the end of the year is to tell government or the tax authorities, they have already deposited 2 million for you. I'm supposed to pay 2.5. Take your balance of 500,000. Chicken now. So you can see that that is not really tax. It is just advance payment for your income tax. And in a situation whereby they have even taken out, let's say, 3 million from your money, like everybody that you have done business with, they have taken about 3 million. And at the end of the year, your personal income tax or your company income tax is now 2 million. What you just need to do is to, thank you, is to say that, okay, I have 2.5 million with you. Now my liability is 2 million. Take out that 2 million, the remaining 500,000, I will carry it over to next year. So you have your tax credit. So withholding tax is not really tax in itself. It's just an income tax advance, which you are supposed to use. Kindly note, as a professional service provider, your withholding tax rate is 5%. So they are supposed to take 5% from your commission and remit it on your behalf. So that is the rate, and that is what should be done. Note again, if you do not provide your tax identification number as a company or your payer ID as an individual, the withholding tax will be doubled. So instead of taking 5% from you, they will take 10%. And the bad thing is that because you don't have a tax ID, that 10% will not even be remitted for you. Because you don't have any ID, it will just be given for free to the government. So you need to register. Now, why government did that was because normally if we charge you withholding tax, you are supposed to come at the end of the year and file. But because you don't have a document, they believe that you will not come back. So they said, okay, if you are not going to come back, let us just take times 2. So whether you come or you don't come, we are not going to lose. So that is the implication. So it is advisable for us to file, to register with the tax authority. So the first thing we should do after leaving here is to register first. Is to register first and get your tax identification number. So that is that on withholding tax. Another one we'll talk about is value-added tax. So value-added tax is like the name implies, when you add value to a transaction or you add value to a good, you pay tax on it. Kindly note, the onus to pay value-added tax is not on the provider of the service. It is on the beneficiary of the service. So what that simply means is that as a realtor, you are providing service to someone. The onus to pay VAT is on the person you are providing for, not on you. But you have the obligation to collect and remit as a corporate individual. So if you are dealing with developers or BRG as an individual, you are not a tax agent. So you don't have right to charge VAT. So it is only the corporate clients. It's only the corporate individuals. If you are dealing with the developer or your brokerage firm as a company, then you must charge VAT on your commission. Then you will collect and remit. It is extremely important. The last one we're talking about is capital gain tax. Capital gain tax, we still have luxury property tax. So these are, but let's say capital gain tax. Capital gain tax is tax that is paid on the gain on disposal of fixed asset. I also leave, please. On disposal of fixed asset.
We need to round up, sir.
Absolutely, we'll do just that.
We'll have opportunity for questions at the end of the
Okay, I'll leave immediately. So the capital gain tax is the tax you pay on the gain of an asset. So when you dispose an asset, you pay that. You need to advise your client. Going forward, it is advisable to hold. When you dispose an asset, yes, you pay capital gain tax. So, and the capital gain tax as a company, you pay 30%. As an individual, you take it to the table that we have here. So you advise your client to rather hold, because it's better to hold your assets. You know, it keeps appreciating, because once you want to sell, you have to pay the capital gain tax. So that will be that about tax.
All right,
Thank you very
sir.
much.
A round of applause for Ololade.